Hi traders, Wyckoff Method Mastery class volume day trader. Welcome in another lesson regarding the how indicators Wyckoff wave volume and Wyckoff wave chart works and how to read the patterns. So we're going through different kind of the assets, and today we're gonna go through accumulation process on S&P 500, and we will have another asset. So yeah, let's go with the topic. So as you see here, S&P 30-minute chart, and once again I will repeat what I'm just telling almost on every lesson, that good accumulation and good distribution regarding the day trading, whatever it means for you, it's perfect setups happen every 1.5 to 2 session day, sometimes 3 days, but usually between 1 to 2. So also here, as you see on S&P 500, we have one session here, another session, okay, and then on the third session we got the very bullish pattern. Like bullish pattern came after 1.5 of the trading session day, but let's say through 2 day session here, and we got the confirmation. I will explain it in a bit. Okay, so remember this, if you are doing day trading, it doesn't mean that we let's say trade one market every day. Some traders are specialized in just one market, like they do S&P 500 only, or Euro contract, or German DAX, or other assets. Yeah, you can use Wyckoff as well on a lower time frame, but if you have let's say basket of assets you watch every day, means that such setup which I'm talking about and which I really like and even love, it's happened after usually, or form on the chart usually in 1.5 and 2 days. So let's go and let's see what is here on this chart. So we had a down move here, okay, and that was nothing special about it. But when the market is going to change behavior, usually produce such wild candles, okay, and those candles are usually marked also, those candles also has a really huge volume. Let's say the good example is here on the next chart. You see a very wide candle and big volume, spike volume, but we will shortly go to another chart, so just an example. And we see quite big numbers appear here, but the market still goes farther down, and we were observing the lows. And what was interesting here, okay, the market generate 354, that's the number, so it was like 35,400 contracts sold on this wave, and that was extremely huge number. So usually when the market is going down on the last wave, which is quite like the candles are very wide, and it's also very huge selling volume, usually the highest, okay, and then the game start from this number, and the market generate extreme volume here, and automatically, look at this, there was buying action. So what it means here, very big number, but no new low here. So the buying starts here, selling starts here, and another on the other side, buying action was there. So if the buyers will not come on the market will really go down, but they meet the buyers over there. So there was kind of the panic, a lot of contracts. Sellers were selling the time and the buyers were buying. So the sellers put a lot of effort on the market, but not result in the price. So judgment, like studying of the chart, is studying of the force, okay? So this is the first place when the buyers comes, and also we could see after this down move a very strong up movement on really huge number. Till this point was the highest up volume, okay? Up wave. What it means that if buying starts here, panic, and also buyers, used to like have the occasion or kind of the promotion that is cheap or cheaper, so let's buy. So when some patterns appear here, also those who were short start closing the position. If you are short, if you have short position, you are automatically a buyer. To close your position, you need to buy. This is how short selling works, okay? But we're not gonna explain it here. So anytime you have a short position, automatically you are a buyer. So buyers step in here, okay? And look at the numbers. The market did another low, okay, that day, but look at the number. From here to here, quite long distance, but they only sold 53,000 contract, 48,000 contract. Listen this, 354, 53, 48. The power of seller decrease, and decrease. And you cannot see it on the normal volume. But if you using the Wyckoff methodology and patterns, like we have few times, or two types of the accumulation, have a look. So market generate a big sell off here, then another wave here, and another wave was here. But the selling power is lower and lower and lower. Okay? And usually in phase A is automatic rally, is a short position closing and first buying. So it's very huge wave, and another huge wave starting appearing here in the phase D. Okay, so we have few phases here, phase A, long phase B, and here is kind of the spring formation, okay, spring formation, fakey breakdown, and the market immediately comes to the range again and tests the range 2 times and go higher. And here, where the buyers present themselves on the chart, how we could see them on the chart? By this number here, first step in here and here, and the buyers took a control on the market. You see it? The number shows you everything. Once again, 354, 53, 48, boom, higher. That was the highest. That is much more higher, almost double, not like, okay? Buyers are here. Sellers losing control, buyers taking control, okay? And that was accumulation, perfect accumulation range. So once we go to the phase D here, okay, have a look on this phase. So usually market after breakdown just still bounce around this upper band. Why? Because usually still there are some sellers. And here we have it again. Look at this. We broke and we go sideways. And how we go sideways? Look at these numbers. If you don't see it, but I will just show you better. 78, 7, 3, 2. 78, 7, 3, 2. Okay? Here was 9 and immediately start rising again to the upside. Okay? So we break this level again. But already we have so much information here, here, and here, that accumulation, that the buyers taking control. So that is thanks to the Wyckoff wave chart indicator, which is powerful, as you can see. Another example here. Okay, this is another chart. This is the stock, Danos Corporation, daily chart. The ticker is DAC. Okay, DAC. And have a look first on this chart without the traditional volume. Okay, here, look at this candle. And we know when the market do such candle, and if there is a huge volume, so something gonna happen? Usually the smart money start to do something on the chart. Here we have a representation of smart money. We know this is not retail's money, corporation money. We call it stopping volume. And what I usually do, how I analyze the market, when I see such patterns and the market is after, after big drop and generate something like this, I usually put a line and I'm waiting. If the market continue here, doesn't matter, that continue, okay? But if it's something like this, I usually, not usually, always put the line and waiting. If the market's starting, going high, low, high, low, high, low, I guess that this is accumulation, okay? And then I'm waiting for information from the chart, because chart is telling you a story. If you studying properly the chart and you are familiar with the Wyckoff accumulation, this is very well explained in our Wyckoff methodology course, which is on our website for those who subscribe our indicators and market commentary. So that works. Look at this. So market here went down, generate a huge volume. We knew that the smart money are just here on this chart. Then the market for 2 months went sideways, and finally tried to make a new low. Very huge volume. But the market, after this session where we have a close here, the next day market came back and closed inside the range. And look at the next close, next close, next close. You see it? So that was spring formation, spring, fakey breakdown. And fakey, okay, sorry, I just need to drag it back. And market give immediately after this huge number. If there is such huge number, it's supposed to fall down more, okay? Because huge number supposed to push the market. Like a lot of effort was there, a lot of effort, but no result, okay? And the market gave us the highest wave. I mean, not the highest in terms of the high or the price, but the highest number traded from here to here on this wave. The biggest number of shares bought it on this wave in a few days, and we see it here on the histogram. Okay, look at this. And the next market try again. The sellers try to again put the market down. Look, only 70. And the next day they close here. They close here, 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 and look, they generate again 234. As first right now, large number. Then breakout, shake out, and look at the closes. And the market, look what's happening here, how you could know before the market break. 1, 2, 3. The buyers, they stopped the market here. Smart money came here, they stopped the market, okay? They did accumulation. Why they going during the accumulation sideways? Guys, you need to know how big guys buying and selling on the market. That is a little bit tricky. So they check if there is still a lot of supply, okay? They vacuum everything. They check again if there is large supply under this level. No supply because they already accumulate everything, and they show the power here, here, and here. They show the power here, here, and here. Okay, already, look here. That was the book. Oh, I'm sorry. That was, I need to delete another one. That was a pattern, okay? Or here. Exactly here. My teacher, David Wise, used to say, if once you know how to recognize a fake breakdown, like if you know how to recognize the spring formation, which is here. Look at this. This is a spring formation, exactly here. You can make a trading for a living. So I also repeat very often, but it's very powerful. And if you know how it works in real, guys, I invite you also. You can see before few months ago, I record such video, volume trading accumulation process, stock market DFH. Find this video, okay? Find this video, and you will see, you know, how I analyze the market and before market move, okay, to the upside. That was the live trading and accumulation process. So I presented live, and you can see, you can compare the chart when it was and how the chart behaved later. And we recognize accumulation in this area, okay, in this area. And some people ask me, Tom, you trade this? No, I'm not buying here. And I'm not also buying here. I'm waiting for such confirmation like here, and then I try to participate and put the stop below, okay? That's very aggressive. But what should be according, like the wake of the entry is supposed to be here after a close above this channel, okay, with such pattern. That should be like perfect entry. But already, if you have a practice how to read it, you can risk here because you gain more, okay? Because stop loss supposed to be below accumulation process. It also depends if you use a stop loss trading stocks or not, because this is another lesson. So when I am trading without leverage, I don't use the stop loss in 80-90% of trades without the leverage. But it's not a topic for today. So thank you guys for good lesson, and I invite you for more lessons like this. We analyze the market in our section Wyckoff Method Mastery, hands-on exercise, because only thanks to exercise you can practice how to use volume and how to read the volume and how to use the very powerful, as you see, indicator, which shows you predict nothing but shows you who's starting control the market, sellers or buyers. And if you know what is let's say what is a background, so for instance in such here in this place you cannot be short, you know, again is the huge accumulation happen here, so it's giving you also the information sometimes, okay, there is an accumulation behind me, market already goes to the upside, I don't know how to participate, but for sure I'm not a seller, okay? So you can use this information to look later on for a little pullback and for another accumulation here, reaccumulation here process, okay? Which is almost like, not almost, it's same like here, reaccumulation process, also market behave like this. So yeah, and my subscribers, I invite again and again, listen the course, go back to the course, Wyckoff course, because that is those phases are described in details, and you have to learn it. Once you learn it, the trading is really giving you a pleasure and giving you a money and giving you satisfaction if you know what you are doing on the market. So compared to traditional volume, I only used to detect something like this, volume spike. There is another lesson about how to trade spikes, and but have a look. Here you have no such information like you have here, you have here, you have here, or you have here. That was only a spike, momentum, okay? So that was momentum. But on typical chart, you have no information how the sellers react, what they generate, how the buyers react. Here you have the information. So that's why I stop using a normal chart, normal like other indicators, which produce a lot of delay signals. So volume and price action, studying the force on the market, gives you definitely better trends, and you finally understand what is going on the market. But first, knowledge how buyers buy and how sellers sells. I mean, institutions, professionals. It's something basic you need to have if you want to make money on the market. Thank you very much for today.